Welcome to the video on the FinTech Revolution, where we explore how finance is being transformed in the digital age. This is the 2026 edition for the FIN 536 course. We begin with Chapter 1, which focuses on understanding the digital financial landscape. Key players in the payment ecosystem include traditional banks like JP Morgan, which processed $10 trillion through JPM Coin in 2025. FinTech startups, such as Stripe and Robinhood, represent a $340 billion market. Digital banks like Chime and Revolut serve over 200 million customers, while EMIs like PayPal handle trillions in international transfers. Digital transformation is driven by several factors, including customer expectations, as 78% of 18 to 35-year-olds would switch for better digital experiences. Cost pressures also play a role, with digital banks having a much lower cost ratio. Technology advancement, like cloud and AI, enables new services, and the COVID-19 pandemic accelerated digital adoption by 5 to 7 years. Looking at the Pakistan fintech landscape, the country has 240 million people and 190 million mobile users, but only 21% banking penetration. Key developments include the RAST instant payment system, the issuance of digital banking licenses, and mobile wallets like JazzCash and Easy Paisa, processing over 15 trillion Pakistani rupees annually. Chapter 2 explores the evolution of fintech and digital payments. Fintech evolution can be divided into 3 phases. Phase 1, financial technology, ran from 1866 to 1967, seeing the transatlantic cable and the first ATM. Phase 2, traditional digital, from 1967 to 2008, introduced SWIFT and PayPal. Phase 3, modern fintech, from 2008 to the present, includes Bitcoin, digital banks, and AI integration. The digital wallet landscape in 2026 is dominated by major players. Apple Pay processes over $6 trillion annually across 70 countries. Google Pay has over 150 million monthly active users. Alipay and WeChat Pay in China each boast over 1 billion users, primarily using QR-based payments. Many countries have implemented real-time payment systems. The US has FedNow, launched in 2023. The UK utilizes faster payments. India's UPI handles over 10 billion monthly transactions, and Pakistan has the instant P2P system RAST. Chapter 3 dives into global fintech ecosystems. Major fintech hubs include the United States, the scale leader in funding, and the United Kingdom, a regulatory pioneer. China dominates with a mobile-first approach, while Singapore serves as the Southeast Asia hub. India focuses on inclusion at scale, and Africa pioneered mobile money with M-Pesa. Open banking allows banks to share customer data with third parties, with permission, through standardized APIs. This accelerates innovation, improves customer experiences, increases competition, and creates new revenue streams. The API economy is projected to be worth over $50 billion annually by 2026. Bank fintech collaboration models range from pure competition to strategic partnerships, like Goldman Sachs and Apple Card. Banks can also acquire fintechs, build their own capabilities, or invest via their venture capital arms. Chapters 4 and 5 cover the crucial topics of big data analytics and cybersecurity in finance. Big data in finance is characterized by the 5 V's: volume, velocity, variety, veracity, and value. AI applications leverage this data for credit scoring, fraud detection with 95% accuracy, trading analysis, and advanced risk management. Cybersecurity fundamentals revolve around the CIA triad: confidentiality, integrity, and availability. Top threats include phishing, ransomware, and insider threats. Key security measures involve encryption, multi-factor authentication, zero-trust architecture, and 24/7 society monitoring. Comparing fraud detection methods, rule-based systems typically achieve 70% accuracy and rely on manual updates, leading to high false positives. In contrast, AI-based systems offer over 95% accuracy, self-learning capability, low false positives, and rapid detection of new fraud types, such as through behavioral biometrics. Chapters 6 and 7 will focus on financial inclusion and the role of gamification in fintech. The financial inclusion challenge is significant, with 1.4 billion adults globally unbanked and a low global financial literacy rate of 33%. Digital solutions, like mobile money, have served over 500 million previously unbanked individuals, with examples like M-Pesa in Kenya achieving high penetration. Gamification in fintech applies game design elements to motivate engagement in non-game contexts. Key mechanics include points and badges, progress bars for savings goals, challenges, leaderboards, and rewards, such as the spin the wheel feature for bill payments offered by Cred. Successful examples of gamification include Acorns for roundup investing and Yoda for prize-linked savings. However, ethical concerns exist regarding the encouragement of overtrading, addiction, and downplaying investment risks. It is key to balance engagement with user protection and transparency. Chapters 8 and 9 cover the transformative technologies of blockchain and crypto, as well as the rise of P2P lending. Blockchain is a distributed ledger technology known for key features such as decentralization, transparency, immutability, and cryptographic security. Its applications extend beyond cryptocurrencies to smart contracts, supply chain management, and digital identity. Cryptocurrencies include Bitcoin and Ethereum, offering fast payments and lower fees, but facing volatility and regulatory challenges. Central bank digital currencies, or CBDCs, are digital fiat currencies being explored by over 130 countries, offering efficiency and financial inclusion, but raising concerns about privacy and bank disintermediation. Peer-to-peer lending enables direct lending without bank intermediaries, with a global market size exceeding $550 billion. Major platforms include Lending Club and Zopa. Crowdfunding has also seen massive growth, raising over $1.5 trillion globally across hundreds of platforms. Chapter 10 focuses on the critical role of AI and machine learning in shaping the future of finance. AI use cases in finance are broad, including enhanced credit scoring using thousands of variables, fraud detection with high accuracy, and robo-advisors managing trillions in assets. AI also powers trading through sentiment analysis and improves customer service, as demonstrated by platforms like Boa Erica. AI bias and fairness are significant concerns, stemming from historical data, proxy variables, and non-representative training samples. Real-world examples include biases in hiring tools and credit limit assignments. Solutions require fairness metrics, debiasing techniques, and regular audits. AI governance and ethics emphasize transparency, accountability, privacy, fairness, and human control. Frameworks include ethics board reviews, model cards for documentation, regular audits, and maintaining human review for high-impact decisions, such as loans. Chapter 11 explores the future of fintech and emerging technological trends. Emerging trends include decentralized finance, or DeFi, with over $100 billion in total value locked. Embedded finance is integrating banking services directly into non-financial applications, projecting $230 billion in revenue by 2025. Generative AI is enhancing customer service and analysis, and quantum finance promises advancements in portfolio optimization and risk analysis. FinTech development relies heavily on the agile methodology, using short sprints and continuous user feedback. The Scrum framework defines the roles and events for managing this process. DevOps and continuous integration/continuous delivery, or CI/CD, enable rapid deployment, such as Stripe deploying over 200 times daily. Predictions for 2030 include over 90% of consumer banking being digital only and physical cash usage dropping below 5% in developed economies. We expect to see over 100 countries with CBDCs, embedded finance revenue exceeding $10 trillion, and AI making most routine financial decisions, blurring the boundaries between traditional banks and fintech. Thank you for watching this video on the FinTech Revolution. We appreciate your time and hope this video provided valuable insights.